What's going on, everybody? It's Wesley Crombley here with Real Estate with Wes, bringing you episode 13. On this special guest edition of Real Estate with Wes, I'm speaking with mortgage broker Bob Bradley from William Raveis Mortgage. Let's get right into it. Bob Bradley, ladies and gentlemen. Bob Bradley with William Raveis Mortgage. Bob, I appreciate you joining me here on Real Estate with Wes. Tell me just a bit about yourself and what exactly you do and how you help buyers out during the buying process.
Hi, this is Bob Bradley. I'm with Raveis Mortgage as one of the executive mortgage lenders. I've been in the industry for 22 years. Prior to coming to Raveis, I was with other mortgage companies and just help people get into their mortgages and help them understand what the best product and program and pricing and structure for their loan might be.
Awesome. So tell me, just from the get-go, I'm a buyer. Let's say I'm a first-time buyer and I'm thinking about maybe buying a home sometime soon. Now, for those who may not know, Bob is someone that you would go to at the very first step if you're thinking about maybe buying a home. That's because he's going to really help you to determine what buying power you can have. So, Bob, just let us know what's a typical conversation that you're going to have with a brand new buyer and what exactly can they expect?
Well, one of the first conversations I actually have with people is in the old days, I would draw a circle and I'd break it into three pies, and I'd say it really comes down to three things: income, assets, and credit. Mm-hmm. So I have to know what their income is so I can see what they could qualify for. I have to know what kind of assets they have for a down payment, and I have to know what their credit score is. Credit scores essentially go from 300 to 850. So the higher you are up on that scale, the better off you are. Mm-hmm. More products that are available, better pricing is available.
I know that for people who haven't heard about the interest rates, just tell us, how good have the interest rates actually been?
They're unbelievably low. So the interest rates right now, depends on the deal itself, but they will translate to roughly $4 for every $1,000 you borrow.
Okay.
So that would mean that a $100,000 mortgage would cost you about $400 per month. Mm-hmm. Back not so long ago, they were roughly $6 or $7 per thousand. So that same $100,000 loan would translate to $700 a month. So a huge savings. I used to say to people that if you borrowed $100,000, you would pay back roughly $200,000 with the principal and the interest. I did a calculation the other day, and that $100,000 you're paying back, of course, your principal, but instead of paying another $100,000 in interest, it was calculated to be about $42,000. So it's just a huge difference in the market, and the mortgage rates are unbelievably low. They've never, ever been this low.
Right.
And even this time last year, I mean, they were a full point higher this time last year.
So just as an example, and correct me if I'm wrong, but even a single point of an interest rate, I mean, we're talking tens of thousands of dollars difference on the life of a loan, correct?
Absolutely.
Now, as a buyer, what are some of the biggest misconceptions you feel like you hear of or people chatter about and you think to yourself, that's just not right, I wish they knew the truth? Is there anything that kind of stands out to you that you'd like to clear the air with?
Yeah. There's a lot of misconceptions, and what I do is I do make sure I educate my borrowers, your clients, so that they know exactly what they're getting into. I had a client call the other day, and after talking to me for 10 or 15 minutes, he goes, "Wow, you just cleared up a whole bunch of misconceptions I had." Yeah. One of his misconceptions was he had to have 20% down. I'm like, you don't need 20% down. You can even do, in some cases, we can do 100% financing, 0% down. But typically, conventional loans are going to be 3% or 5% down. FHA is typically, people usually go 3.5% down on that. But
yeah, and you segue perfectly into my next question, which is, as a buyer, I know a lot of people don't understand what they're getting into when it comes to a down payment, and just go a little bit more in detail. I know you said that you don't have to put 20% down. What are some of the common options for people who maybe have, on paper are a great borrower, but maybe don't have a ton of money in their savings?
Well, and what I'd probably do there is I do a higher loan to value or a low down payment. Like, let's just pick 5%. So let's say we were doing a $200,000 purchase. So their 5% would be $10,000. Right. Now, to offset that, you would have your deposit, of course, which would be backed out of that. And we may also structure the transaction to have a lender credit or a seller credit.
There are cases, and I've had multiple buyers just in the past 6 months that I've helped buy, and we were able to build in that closing cost bracket that you talked about, that comes with every single transaction, and that's really helpful in some cases to have that extra $5,000 in your pocket. The other thing I really want to touch on here is a lot of the worry that I hear often is, my credit is really poor. It's been in poor shape. I had a rough couple of years. I'm getting back on my feet. What are some tips that you can give to buyers out there who maybe do want to improve their credit? What are just some easy things that they can work on just in a few months to help kind of make that start to trickle up?
Well, they should really address any charge-offs or collections that they have on their credit. Those are just going to work against you for the rest of your life. So if you know what those are, and you can see those usually on freecreditreport.com, I can always run the credit report, go over them, but I prefer to kind of have a baseline to start with. So if somebody has that, well, my credit is not so great, I like to get their credit kind of in a place where they can move on it. The other thing is that happens a lot with people. If you have a line limit of say $10,000, you have $9,000 charged to it. Credit scoring model is not like that. It sees the utilization of that credit line being maxed out.
Right.
You really want to try to keep your credit cards at about 30 to 35% of the available balance.
So that's a huge tip. Even if you have these great big limits on your credit cards, you still want to make sure that you're staying, well with under 50% as really your healthy margin there for looking like an optimal borrower from the credit bureau, correct?
Yes, absolutely.
Okay. Now, I always love a good story. Do you have any go-to stories that is like a bittersweet story or something that you think stands out as you being a lender and anything that you've worked on recently?
Yeah, I mean, every deal's an adventure. It's always fun to structure some deals.
Mm-hmm.
And but the other thing that's very interesting is many years ago, I had a client. I'd done a pre-qual for them, and we had the filing system. So it was all approved, and so I'm getting ready to close. And of course, we do a last minute check of everything. Income, assets, and credit. We always check them. Make sure you didn't buy a Mercedes or something to add to the debt.
Yeah.
Or do this or lose a job or whatever. So I got a call from my processor and said, so-and-so doesn't work there anymore. And I'm like, of course he works there. I talk to him every day about it. He doesn't work there. So I called the client. I go, do you not work at such and such company anymore? He goes, why? Which is always a kiss of death. And I said, well, because you have to have a job. I said, please tell me you changed jobs. He goes, well, I thought you did a pre-qualification in April. I said, right, but now it's June. I said, so anyway, we had to scramble, which we did a little bit. He had a new job, and it was fine, but it was just that last minute, oof. But it closed on time.
And you still made it work.
Oh yeah, absolutely. We make it.
Wow.
Listen, if it's going to work, we'll make it work.
But I guess moral of the story is don't go crazy with purchases or changing jobs while you're in the middle of purchasing a property.
Right. I say don't make any sudden movements.
All right, Bob. Thank you very much. We love having you on the show. Hope to see you soon. Bob Bradley, everyone, with William Raveis Mortgage. I'll have his contact information down below. Feel free to reach out to him for any real estate mortgage lending needs of any kind. Thanks, Bob.
All right, great. Thanks, Wes, so much. I really appreciate your shows. I think it's a great thing you do, and look forward to the next one.
Thank you very much. Bye, Bob.
Take care now.
I want to thank Bob Bradley once again for coming on to Real Estate with Wes. He provided so much awesome knowledge on the mortgage and lending end. There's a lot of questions that I didn't even get to in this conversation with him. I'm probably going to have him on later in the show for part 2. But thanks again always for watching. I'll see you next week on episode 14 of Real Estate with Wes. Have a wonderful weekend.